There wasn't a lot to like this week. Rate hikes, an increasing talk of recession, an ugly bond market and an escalation of the war in Ukraine. So it's surprising the falls weren't worse on the local market, though perhaps many have just stayed away. A weekly fall of 2.6% has landed the All Ords back to where it was in early July. Coal miners were among the few that gained, thanks to the war. Markets around the region fared no better, while Wall Street fell overnight. Now 72% of S&P 500 stocks are now down for the year. And not only did the US Federal Reserve hike rates by 75 basis points on Wednesday, it also hiked anxiety levels about just how high it will go to tackle inflation. Wall Street's falls this week are unusual following a Fed decision. As you can see here, traders have taken to rallying after a rate hike. A classic sell on the rumour, buy on the fact. But what might have changed this time is that the Fed Chair Jerome Powell indicated at his press conference that he's almost resigned to recession. What might also be worrying markets is that the Federal Reserve Board can't agree on where rates are going. Here's the Fed's latest dot plot, which shows where each member thinks rates will be in the future. Take a look at 2024. That's a big spread. And it wasn't just the US Fed raising rates this week. Everybody's doing it. And Australia will join that list in just over a week, and punters are now rallying behind a 50 basis point increase. There's a silver lining in all of this talk of recession, though. Oil prices have declined for the fourth straight week, back to where they were prior to the Russian invasion. And the Australian dollar also keeps falling. It's back to where it was in mid-2020. That's finance.